Hi, I'm Kenneth, and welcome to my channel. In this video, I'll be sharing how I use a sell put option strategy when investing in Tesla. Before I begin, I wish to stress that this is not financial advice, and this video is for educational purpose only. Please do the necessary research before investing in any company. I'm not going through the basics of options trading. There are many YouTube videos which you can refer to. One of the best sites is Investopedia, which you can find the link to the website in the description below. There are 4 ways to use options. For the purpose of this video, I'm focusing only on sell put options, which can be used to lower our risk when investing in a highly volatile growth stock like Tesla. Before I go into the details, it's important to go through some basic terminology since I will be using them frequently in this video. A put contract gives the put buyer the right, but not the obligation, to sell a stock at a specific price, i.e. the strike price, by a specific time, i.e. the expiry date. For this right, the put buyer pays the put seller a sum of money called a premium. In this strategy, I will be the seller who will be collecting a premium from the option buyer to take on the risk to buy 100 shares per option contract if the share price dips below the strike price. For example, say the strike price is $300 and the share price is $250 on the expiry date. The buyer has the right to force the seller to buy 100 shares per contract at $300. Do also note that the buyer can force the seller to buy the shares if the current share price is below the strike price anytime before the contract expires. Out of the money. For put contract, a contract is considered out of the money when the strike price is below the current share price. Premium. The price paid by the buyer to the seller to take on the rest. Strike price. The price at which the put buyer can sell the underlying shares to the seller. Expiry date. The date the option contract expires or ceases to exist. Before I continue, if you like this video, please like and subscribe to my channel. I'll be posting new content each week. In my opinion, the sell put strategy is best suited for investors in these conditions. First, only for stock we are confident the price will likely go up over the midterm. This is a bullish strategy, and it will only work with stock which you believe its share price will likely go up. It is critical to do the necessary homework and research into a company whose revenue, income, earnings per share and free cash flow can increase in a sustainable way. In my opinion, I believe only Tesla can fit these conditions. You can also check out my earlier video on my Tesla analysis. Second, investors who are looking for protection against possible downside before the expiry date. Is protection against a possible downside in the share price before the expiry date, or we feel that the current share price may be too high and we'll only consider if the share price is lower. The sell put strategy is basically sacrificing some potential upside gains when compared to buying the shares directly with downside protection. Third, require funds to be deposited in the brokerage account during the contract period. This strategy requires you to have the funds parked aside to buy at least 100 shares per contract at the strike price. Tesla has gone through its 3-to-1 split on August 2022, and this makes options trading more accessible to retail investors. Fourth, looking for higher returns than fixed income investment. This strategy is good for cash-rich individuals which are looking for higher returns when compared to either fixed deposit or treasury bonds. This strategy can also be used for investors who need cash flow for livelihood, just like the interest from a fixed income investment. I am a conservative investor. I can reduce my risk further by 1. Do cash covered put options. For each contract, we will need to have at least this amount deposit with our brokerage, i.e. the strike price minus the premium multiplied by 100. We can deduct the premium amount cause the buyer will need to pay the seller the premium amount as soon as the contract is done. 2. Deep out the money put options. I will do a sell put option at the previous lowest price or close to the lowest in the previous cycle. We are looking for a strong support level. Nevertheless, we must be comfortable owning the shares at the strike price. I will share more later in this video. 3. Expiry date of at least more than 9 months. I prefer longer term expiry because I do not need to monitor consistently, and the premium is much higher than shorter term contracts. It's also a lot easier to project company fundamentals over a longer term period. Do note that I'm not trying to maximize my returns, but to offer protection on possible downside. There are three possible scenarios with a cash covered sell put. Let's assume that we sell one Tesla put options at a strike price of $213.33. And the expiry date is 9 months later, say 15th of September 2023. The premium is $26. Scenario 1. Price expiry date is greater than the strike price, i.e., if Tesla's share price is above $213.33 on the 15th of September 2023, we will be able to keep the full premium, i.e., $26 multiplied by 100. This is the best case scenario. Scenario 2. Price expiry date is greater than the strike price minus the premium, i.e., if Tesla's share price is between $187.34 and $213.32, we will be forced to buy 100 Tesla shares at $213.33 from the buyer. This is still a profitable trade, as the actual cost is less than the premium collected. We can sell all the 100 shares after the expiry date to keep a portion of the premium. Scenario 3. Price expiry date is less than the strike price minus the premium, i.e., if Tesla's share price is less than $187.33, we will be forced to buy 100 Tesla shares at $213.33 from the buyer, and if we sell the shares in the open market, we will lose more than the premium we collected. This is the worst case scenario, and we should try to minimize this possibility. But we must also be prepared to own and hold Tesla shares at an actual cost of strike price minus the premium, i.e., $187.33, which is likely a very attractive price to own Tesla shares. If you are not prepared for scenario 3, please avoid doing sell put options and stick to buying the shares directly. I try to reduce the possibility of scenario 3 by checking what is the lowest price in the last cycle. The previous low was $207 back in June 2022. So if we wish to be conservative, we can do a strike price closest to the lowest price, i.e., $213.33. As of this recording, this option can potentially give you a return of $26 divided by $213.33 minus $26, which gives you a return of 13.8% per annum. And you only start to lose money if the share price dips below the strike price minus the premium, which is $187.33. Another possible strike price we can consider is to aim for the strike price minus the premium at $207 if we believe that $207 offers strong support. $241 strike price could be an option, with a premium of $36. We'll only start to lose money from this trade if Tesla goes below $205 on the expiry date. The returns will increase to 17.5%, but it comes with a higher risk. Do note that the higher the strike price, the better the returns, but it's also increased the likelihood of scenario 3 occurring. If this is the first time you're trying to do a sell put option, my advice is start small and get the hang of the additional processes when opening and closing a put contract. Focus on protecting the downside than trying to maximize the reward. The premium is not free money. There is a real risk associated with a sell put option. Sell put contracts when the VIX is up and when Tesla's share price dips. The premium will increase significantly. Ask someone who has tried sell put options to guide you through the execution. The brokerage I use is Tiger Broker, and Kelvin Learns Investing has many good videos sharing the UI and steps in how to open and close options. You can find the link to his videos in the description below. I find put options a less risky alternative to investing into Tesla than buying the shares directly, as I'm looking for downside protection, especially in today's volatile market. I hope you find this video useful. Please like, share, and subscribe to my channel. Thank you.